Welcome to TradeTheMBI.com. This is John. This report is for the 22nd market in this perpetual up run, but here's the warning sign right here. Shakeout indicator. We got higher histogram here when we made new highs. Now, much lower histogram starting to flatten out at record highs. So this really becomes the question mark. We also have the big DOC spread coming across here. We do have a reset of the steel, so any dip is likely to be muted simply given the fact that short-term buyers are available. The question is whether going into the end month we'll actually see a spike in short interest. We got to see a separation between the cyan and green lines here representing shorts activating and midterm buyers falling off, and we haven't seen that yet. So like I've been saying, this is just a perpetuation of what we expected from the 90s model of the market, given the prosperity. There's nothing happening in the impeachment front, so that's a bunch of media circus fun, but the market is completely blowing it off and pretty much saying 100% likelihood Trump stays in office, guaranteed. And I think given what we're seeing from the market, they're betting on re-election because we would have seen a significant discount if that wasn't happening. And we're actually looking at a premium to the market now. We're up at 33. Though, let's be honest, though, the Fed is quite a bit to blame for this because that liquidity push, because of the whole repo market situation and them loaning money to actual hedge funds now directly is a problem, and it's going to exacerbate these kinds of runs, which is really creating a significant issue. And particularly, you're going to end up with a lot of funds in that either both that missed some of it last year and then this year are already maybe behind, maybe weren't fully allocated because they thought things were too frothy. They're already going to be behind the curve and have to chase yield to try and catch up to the S&P's performance, because of course the real story is their bonuses and everything are tied to their performance related to the S&P, and if they're behind, you know what happens then. They're going to have to start making riskier moves, and that's going to lead to the volatility. That's when we're going to see things start to move. Euro completely filled in the positive extreme from right there. This is no shock. The euro is in malaise because the whole EU is in malaise. That hasn't changed, but it's still up well enough. I mean, we haven't broken that 107, 108 range, which would be terror time, because that certainly would reflect a situation where the European economy would not be responding in a positive way, and that would put negative pressure on the market, significant negative pressure. So that we're not seeing that means that everything's well in Denmark, even if we're not in Denmark. Switching to gold, still at a premium, and that is both the risk relation to the market's elevation as well as, like we've talked about, international situations, potential blow up of Iran, anything, and the idea that there's some potential pent-up inflation and demand situations there. Intraday was kind of nice. I mean, we had the green rise. We ended up with a decent little short signal that started here, but we had the reset of the steel, and it literally crossed immediately, kind of ending it pretty fast, and then it broke out to new highs, but that was a little too much for it. You can see the second hump here was a little bit lower. The short signal came in and it filled in everything all the way back to this dip below the red line that was right here, and filled that in perfectly. Then the new buy came in. It was kind of soft going through, but then the P2s came in, and again, here's a perfect example of P2s with the X signaling and the run up there, and that's what we're at right now with a nice positive going into the pre-market. What we'll be watching here is this high as it's approaching the new peak. If we look at our shakeout indicator, we're already making a lower histogram, so if that starts to show a lower reading on the histogram, then that would be the signaling for this run up to fade. We filled in. The dip was mostly just about the positive extreme. It had a little bit more to go all the way down to this bar here. So 33.27 range would be the target once the market's open here in a little while. As always, trade well. We'll talk again later. I'll put anything up chart-wise on the Skype chat.